As far as investors are concerned, Jimmy, I don't know. If they were bullish on the idea of gridlock, it still looks like we're going to get that with the House of Representatives going to Republicans, even if it wasn't as big of a margin than they expected. Am I wrong?
Yeah. If you buy into the notion that gridlock is good, and I think long-term gridlock is not good. We need to do a lot with immigration, deregulation. But over the shorter term, if you think gridlock is good, that might be the case, unless, of course, the gridlock means there's gridlock over raising the debt ceiling. That is not good. And I think before the election, people thought, well, gee, we might get some good stuff here. Gridlock is bad. Maybe we'll extend the Trump tax cuts or something. Now the gridlock is, oh boy, there's going to be a clash over that debt ceiling, which very well could happen. In that case, again, gridlock, not so good.
No, and that's why maybe there'll be pressure on the lame duck Democrat Congress here to pass something. You think that can get done or no?
They got to do a lot.
On the debt ceiling.
There's remember that permitting reform bill that was supposed to go along with the Inflation Reduction Act that's floating out there. I think there's going to be a lot of pressure on the Biden administration to get that done, because I mean you can just see how this conflict is shaping up. If Republicans end up with only the House and barely the House, the sort of the wilder outlier members of the Republican Party are going to have more influence. It's just not hard to see how this thing can look really, really ugly next year. So I think it really would behoove the Biden administration to get that done.
Well, the conventional wisdom on Wall Street is another reason the gridlock is good at the moment, is to rein in fiscal spending, that the Republicans can put a check on the Democrats' urge to spend in an inflationary environment. And that would be particularly good for bonds, where we've seen a big sell-off shake the stock market. There's something to that.
We're not going to get a stimulus package at this point. If there's a recession.
No, but maybe they can drop the student loan package, for instance. Maybe they can pare back the Inflation Reduction Act. These are all things that we hear the candidates talking about. I don't know what's achievable, but it would amount to less fiscal spending.
No, listen. I think if you're gonna bet on more or less, I think you'd want to bet on less, because not only now do you have this, likely a split where Republicans may have, very narrow control of the House. But then you have sort of the business cycle, meaning this huge inflation surge, which itself, I think, makes getting more spending done very, very hard, because Democrats, assuming they hold the Senate, again, also have a very narrow hold. So if you're worried about a flood of spending to further juice this economy and offset what the Fed is doing, that's not going to happen.
So, Jimmy, as someone who talks to investors, what is your read on where the market is on Trump? Because now there's a question, right, of whether he'll announce, how he'll take the results where a lot of his backed candidates did not do well, including Dr. Oz in Pennsylvania, and what that might mean for 2024. Where do you think investors are here?
Yeah, well, I won't psychoanalyze or get inside Donald Trump's head. But I have to say that, when I talk to people, when I talk to Republican donors, I mean, they would love to see Ron DeSantis run for president. I mean, I think Ron DeSantis is going to run for president. I don't think he's going to make that Chris Christie mistake. So at that point, I think I'm not sure exactly what is going to happen with the Republican Party, if it's going to continue down the Trump populist lane, or something that seems a little bit more recognizable to Republicans, where they talk more about tax cuts and deregulation. So I think if you were expecting a sort of a rerun of Trump, obviously last night puts that, I think, in some doubt.